Hi, everybody. I want to say welcome and thank you for joining us tonight for this insurance information webinar. I'm Gloria Stearns, the Placer County Economic Development Director. Tonight, we hope to cover a lot of insurance issues that are on everyone's mind. But if we don't get to your specific question, please note that there are two ways of getting more information. On the screen, you can see the phone number 800-927-4357. That's 800-927-4357. That's a way of getting additional insurance information. Another option is to go to the website www.insurance.ca.gov, and that's on your screen too, www.insurance.ca.gov. So you can get more information from both of those ways. So we invite people to put their questions in the question section in the bottom of your screen. We've shared some questions already with Lisa, who's coming to speak with us tonight. Our first presentation is Lisa Strange from the California State Department of Insurance. She's the Northern California Outreach Manager, and she has a 15-minute presentation. And then we can take about 15 minutes of questions before we start our second speaker, George Kostirko, and I hope I'm saying that correctly, from the Federal Small Business Administration. George will have a 15-minute presentation and then take questions related to business disaster resiliency. This whole session will be recorded, and we will share the link with you later this week so you can send it on to people you know that might have missed tonight's webinar. So let's get started. Lisa, thank you for joining us tonight, and let's have your presentation.
Great, thank you so much, Gloria. Can you hear me okay?
Yep, you're great, thank you.
Great, thank you so much. And thank you so much to all of the Placer County Office of Economic Development for letting me present tonight. As Gloria said, my name is Lisa Strange, and I serve as the Northern California Outreach Manager at the California Department of Insurance. And I'm happy to be with you tonight to give an update on our wildfire safety regulation to help drive down costs of insurance. Next slide, please. Thank you. This may sound familiar to some of you since the regulations were approved in October 2022. The Department of Insurance worked with the state's emergency response and preparedness agencies, including CAL FIRE and the Governor's Office of Emergency Services, to create a list of actions that you can take to protect yourself from wildfires. We call it the Safer from Wildfires regulation. And this regulation directs insurance companies to provide discounts to consumers with transparency about risk rating. The insurance companies had until April 12th of this year to submit their new rates to the Department of Insurance, you may hear me refer to it as the CDI, for approval. The regulation required insurance companies that recognize the benefit of safety measures such as upgraded roofs and windows, defensible space, and community-wide programs such as FireWise USA and the Fire Risk Reduction Community, FRRC is the acronym I'll use later on that, designation developed by the state's Board of Forestry and Fire Protection. Next slide, please. So I want to talk about the mitigation requirements. There are 3 slides on this. So step 1 is to protect the structure. It's pretty straightforward. There's a few things on your screen here. Class A fire-rated roof, enclosed eaves, fire-resistant vents, multi-pane windows, and a minimum of 6-inch non-combustible vertical clearance at the bottom of the exterior surface of the structure. I suspect some of you in this meeting this evening are familiar with some of these best practices. Next slide, please. Step 2 would be to protect your immediate surroundings. And I'll go over four ways. 1, clearing of vegetation and debris from under decks. 2, clearing of vegetation, debris, mulch, stored combustible materials, and any and all movable combustible materials from within 5 feet of the building being evaluated. The third thing would be incorporation of any non-combustible materials into that portion of any improvements to the property of the building being evaluated, which is situated within 5 feet of that building. And then 4th, removable of combustible structures, sheds, and other outbuildings from the immediate surroundings of the home to at least a distance of 30 feet from the building being evaluated. The term building being evaluated is the residential or commercial structure in question and does include decks that are attached or adjacent to the structure. In the event that the applicant or insured does not control the entirety of the area extending 30 feet from the building, removable of combustible structures from as much of the area that you do control is advised. For purposes of this regulation, the property being evaluated that I keep mentioning should comply with Public Resources Code Section 4291 and any applicable local ordinances governing defensible space. Next slide, please. And step 3. So far we've talked about the structure and the surroundings. And now step 3 of this framework is an effort to obtain a community level mitigation designation. This will most likely involve at least one, if not more, local government agencies. Community level mitigation designations include FRRC, as I mentioned earlier, which is a designation by the Board of Forestry, and a Firewise USA site in good standing. The Firewise program, as many of you may know, is a nationwide program created by the National Fire Protection Association. California has more than 700 Firewise communities with more forming, and it is an important part of California's efforts to ensure communities are prepared against wildfire. When we first started talking about these regulations a year or so ago, there were only 500-ish Firewise communities. So I'm super happy and excited to share that there are now more than 700 in California. CAL FIRE's Office of the State Fire Marshal's new Community Wildfire Preparedness and Mitigation Division works to assist local communities in receiving this designation. And I can share a link in the chat for more information on creating a Firewise program in your community. Also wanted to share that there is grant funding available to help coordinate and fund Firewise communities. Currently, there are some insurers that offer discounts for both or either community mitigation and property parcel mitigation. We do not yet know what the discounts will look like until insurance companies' rating plans have been approved. As I mentioned, the date to submit the plans was April, so we're currently reviewing insurance companies' plans with the expectation that they will be in effect by Q4 of this year. Next slide, please. So along with the discounts, transparency is another very important benefit of this regulation. We learned that most people did not know that insurance companies assign a risk score to your home or business. People need to know this information because if you know about the risks on your property, you can take action to reduce them and make yourself and your neighbors safer. For the first time, this regulation requires insurance companies to give you the wildfire risk score for your property, and they have to tell you how they created that score. For instance, what factors went into the score. The wildfire risk score or classification must be provided to you at the following 4 times. First is when you apply for a new policy within 15 days. Second is before you renew a policy, which is at least 45 days. Third, before you are non-renewed with 65-day notice, 75-day notice. And 4, when you complete mitigation on your property and request a revised score, and that's within 30 days. By creating a right of appeal, this regulation is giving power back to consumers. And if you are not satisfied with the response to your appeal, the Department of Insurance is on your side to help. And again, we'll put that number in the chat and the website as well. Next slide, please. Thank you. The regulation includes both residential and commercial insurance lines. My understanding is that associations will often have a commercial policy. So for a commercial policy, the property and the individual buildings within an HOA will need to be recognized for the mandatory property level mitigation factors listed in the regulation, such as clearing of vegetation, Class A fire rated roof, and some of the other factors specified in order to qualify for a discount. HOAs may also qualify for other optional wildfire mitigation effort discounts that an insurance company may choose to include in its rating plan. If an HOA is located within one of the listed community level designation areas, they may also qualify for a community level discount. Now, I wanted to talk briefly about the California FAIR Plan that many of us know is the insurer of last resort. The Department of Insurance and the FAIR Plan reached an agreement to increase the commercial coverage limit to $20 million per location. This addresses greater needs for homeowners and businesses, such as recreational youth camps, homeowners associations, wineries, and agricultural groups for additional coverage. The department is reviewing the FAIR Plan's filing with the goal that this coverage would be available also by fourth quarter of this year. Additionally, really excited to share that the FAIR Plan, we already approved the FAIR Plan's discounts starting last week, August 23rd. So they too had to submit their rating plan to us by April 12th, and we've approved their discounts already. And we expect to have the other companies approved by the end of this year, as I previously mentioned. So the FAIR Plan has offered a 10% discount on policies in a FireWise community since about May 2018. But now, under this regulation, the FAIR Plan is offering 2 more wildfire hardening discounts. One for protecting the structure, which was the step 1 that we spoke about, and another for protecting the immediate surroundings of the dwelling, which was the step 2 that I spoke about. So when applied, these discounts will reduce the wildfire portion of the policy's premium by 10% and 5% respectively. So depending on your level of wildfire risk, this can be a large component of your overall premium. So we would suggest that you contact your broker to find out what this means for your premium, how to qualify, and when you could receive the discount. Next slide. So in summary, this regulation, we expect to see 4 things. 1, more businesses, homeowners, and communities making investments in wildfire safety, greater community resilience, reduced losses from wildfires, and more insurance coverage for mitigated properties. We've heard from thousands of Californians who want to see discounts for wildfire safety and greater transparency. So this regulation really attacks the root cause of non-renewals, which is wildfire risk, and they will make Californians safer. And with accurate pricing of insurance, we expect to see more insurance options for people through a more competitive market. Next slide. So now I want to share some of our online tools that the Department of Insurance has created to help you scour the marketplace. We have top 10 tips for finding residential insurance on our website, which is a summary of information and options available to you. We also have a home insurance finder tool, which can help you identify those insurance companies writing in high-risk regions to help narrow your search. And it also provides you contact numbers for licensed agents and brokers in your area. And then lastly, just wanted to share and remind you that we are here to help answer any questions about any line of insurance. We regulate auto, some health, so much more than just homeowners. So if you have any questions on any line of insurance, we're here for you. We can review your homeowner's policy if you've been canceled or non-renewed, or if you wish to file a complaint with us. And you would do so by contacting our consumer hotline at 1-800-927-HELP, which is 4357, or online at insurance.ca.gov. And we also have a chat feature available for your use if you prefer that route. So that concludes my presentation, and I'm here to answer any questions or take any comments. Thank you so much.
Hi, Lisa. It's Gloria from Placer County. I've noticed there's some questions in the Q&A.
Okay.
Do you want to check them out, or do you want me to read through some of these for you?
Whichever you prefer, Gloria.
I can read some for you. Here's one that said, how can the state help large homeowners associations? The rates have gone through the roof. I think you might have covered that one, but if you want to give us like a short answer.
Yeah, I think I did kind of cover that one. Mainly it is that HOAs may now qualify for discounts through this regulation, and so we're excited about that. And always want to say that if you do contact your insurance company and you don't feel like they are acknowledging the mitigation efforts that you've done, we would invite you to please call the Department of Insurance and let us take a look at what you've been told.
All right, super. We have another one that says, will there be a reversal of policies to help the average homeowner to get affordable insurance, especially when they have a relatively low number and then they say 6?
Okay, so what that probably means, so there's two companies that rate homeowners. One is Fireline, and I believe they rate 0 to 30, and then there's CoreLogic, which rates 1 to 100. So it seems like this consumer was rated 6. I don't know which one that was on, but that does seem like a relatively low number. And so what we are having folks do is, as I said, we're speaking about the regulation now, but we're still approving the plans. So by the end of this year, when your policy comes for renewal, if you do not have a discount based on the work that you've done, please try to appeal that with the insurance company. If you still don't feel like you received the discount, give us a call.
All right, that sounds good. And we keep putting your insurance or your website information all over the place. So everybody make sure that you take the number down and the website down. We have another question that says, what is a Fire A roof? I'm guessing that might be a Class A fire roof.
It is. And what I can say about that is that the Office of the State Fire Marshal maintains a list of tested and approved materials, but we know that most roofs qualify, including asphalt shingles, concrete, brick, or masonry tiles, and metal shingles or sheets. It does say that wood shake shingles are not Class A fire resistant rated. And again, I would invite you to visit the Office of the State Fire Marshal for a more comprehensive list of materials tested and approved.
All right. One of the other questions, and I think you did cover this earlier, was what is required for a fire-wise community? I think we had a couple of slides on that one.
Yeah, and I can put the link in the chat. I'll do all that when I'm done answering these questions, so folks could stay on the line. And I know we have another presentation anyway, so please definitely stay on the line. But I'll put some information in the chat on how to join a Firewise community. And if I didn't say it during my presentation, it's important to note that there are grants available to help communities start and fund a Firewise community. So so let me put that link in there, and I really believe that'll help us.
Okay. And just so you know, I was trying to put some things in the chat, so I might give a shout out to Ava for some help with putting some things in the chat. So thank you in advance for that, Miss Ava.
Yes, thank you, Ava.
So next I saw, does the California Fair Plan provide discounts for either an A-rated roof or for a Firewise community? And this person said, I asked because no other insurer will insure except the Fair Plan.
Okay, yes, the Fair Plan has given a Firewise community discount of 10% since May of 2018. And as I said, we just approved their plan last week, and they are giving discounts for the other two mitigation efforts, which were the different things you could do to protect your home and your surroundings.
And that got you the 5% discount then too, right?
Yes. And so what we're telling folks to do is contact your broker to find out how you go about getting that discount with the Fair Plan now.
So if you do all of the things, you could end up getting a 15% discount off of the Fair Plan, right?
Yes, but if you're part of a Firewise community, then you get an additional 10.
Wow. All right.
Yes.
I have a question here. Where can firewood be stored at a property? We see a lot of that in Placer County.
Yeah, and well, from the regulation standpoint, they want things like that stored at least 30 feet from your home. Beyond that, I think I would speak to maybe CAL FIRE about their defensible space and what those laws look like.
Excellent. I know I've been on their website and I've seen some nice illustrations there too. That's really helpful for me. I'm very visual.
Me too. Me too.
Oh boy, here we go. But this is keeping it real. The Fair Plan discount is helpful, but the coverage level is too low and coverage terms are, I'm not going to say it, not great. What is the plan to improve the Fair Plan? What is in
Yeah.
the plan to improve the FAIR plan?
Yeah, and thank you. That's a great question. I'd be remiss if I didn't share that we have done a lot of updates to the FAIR plan. When this commissioner took office, there had not been any updates in several decades, 20 years or something. And so just a couple things that we've already done and we continue to work on more is a couple years ago, dwelling coverage was only 1.5 million. It's now 3 million per dwelling. So we're happy about that. And then as I shared for commercial, it was 4.5 million. We increased it to 8.4 a couple years ago. And then as you heard today, it's now by quarter 4, it will be 20 million for commercial. And then for business owners, it was 3.6 million, and we've increased it to 7.2, and then also to 20 million per location. So we've done a lot of work around the FAIR plan, and we realize there is more to do. One thing that we're still in litigation with the FAIR plan is the commissioner wants them to offer a comprehensive policy to include all of the stuff inside your home, right? Not just the dwelling. And the FAIR plan sued us, but we are still in litigation with them. And the commissioner says every day when he's out in the communities that he's not going to stop until they do offer comprehensive policy. So stay tuned. We're working on it. We realize that the rates are high. We realize some people have to buy 2 policies because they don't offer that comprehensive policy right now, but we are working on it.
All right, I have another question here. Please update us on pending legislation regarding the use of forward-looking geographic risk assessment like Vera Risk. I haven't heard of Vera Risk, but do you know about that one, Lisa?
Yeah, so I'm not completely versed on everything, but we did hold a catastrophe modeling workshop a couple weeks ago, and there are some things in the works that the commissioners working on. In terms of legislation, I can't speak to that, but I will be able to share with Ava, who perhaps can get out the information to all of the attendees about the catastrophe modeling workshop that we held a couple weeks ago.
Oh yeah, we can certainly do that. So tomorrow or later on when we send out the link for the recording of this, so everybody can share that. We can put some additional information in there too, so everybody gets a little bit extra here.
Perfect. Thank you so much. And I'm sorry I'm not prepared to speak more about that, but I do know that is a big deal, and we're definitely looking into that here at the department.
All right, we have another question. Can you please talk about the fire maps that are used by insurance companies in CAL FIRE?
Yeah, so as folks know, let me pull up my notes on that. So as many of us know, the new CAL FIRE hazard severity zone maps were updated last year. However, insurance companies are not to use those maps in rating insurance. Insurance companies have their own wildfire risk scores, as I mentioned earlier, which are 2 of the tools they use is Fireline or CoreLogic. It is our understanding that insurance companies are not using those maps to rate your risk. And if they are, we want to hear from you. So please give us a call.
All right, thank you. This one, I don't know. And you're going to have to see if you know this one. We are mobile home park managers. Is this something available for mobile home owners? We live in an area with a lot of trees. I'm guessing they might be referring to like the Firewise communities and some of the options that they can have available for getting some discounts.
Yeah. Yeah, mobile home park managers. Is this something available for mobile home owners? Oh goodness, I am so sorry. I do not have an answer to that question. We do have a mobile home brochure as well as many other information guides on our website. So let me look up that answer and I can provide it through Ava as well.
Yep.
Or alternatively, for any questions that aren't answered tonight, you can email me at crob@insurance.ca.gov.
All right, and we can set that, we can put all of that in the email too that we're going to send out to people. And then also, if Lisa gets us some additional information for the mobile home people, we'll put that in the email for everybody so we can share that, because I know that there's more than one mobile home out there, one mobile home park out there in Placer County. All right. Have not been able to find renter insurance for mobiles either. All right. That again, I'm going to say we might have to cover that in a special time.
Yeah, we have, like I said, we have a mobile home trifold kind of brochure, as well as a renter's insurance guide. So I'll be sure to provide links to both of those to you.
All right, here's one that says, I understand what the government is trying to accomplish with these regulations, but the issue I'm concerned about is that the insurers are leaving the market entirely. So all that is left is the much more expensive FAIR plan. Don't all these regulations just cause the insurers to leave? And what is being done to bring insurers back into the market?
Yes, that's a great question. So actually, yes, we do know that there are some insurance companies that are no longer writing homeowners insurance. I think it's important to note, though, that they aren't leaving California. They're still writing auto and some of the other lines. Some of them have just paused in writing homeowners insurance. And what we're really hoping and expecting with this regulation is that by folks making themselves safer from wildfires and bringing down that risk, that will entice insurance companies to begin writing again, because there will be less risk. And what we know from a couple of the insurance companies is that they are just pausing. Their decision was just to pause writing policies. And so again, we're really hoping that bringing down that risk will entice them to begin writing again in California.
So I'm going to pick up on something you just said, and you said they're pausing, but yet the perception is that they're pulling out. Are they pulling out or are they pausing?
They're pausing. And many folks are saying they're leaving. And to me, when I hear that, that means they're leaving California, like not writing any other lines of insurance. And I want to be clear that this is only involving homeowners insurance. And so I think we all know that State Farm, right, they paused writing homeowners insurance, but they are not non-renewing you if you already, or they're not canceling you if you already have a policy. And they're still writing auto and, whatever other lines they currently write. So this was a pause for homeowners only.
All right. I have one question that says, is there a more specific checklist for HOAs to know what they need to do to maximize their chances of not being canceled? Like exactly what sorts of siding, roofing, windows will actually increase the rating of a complex? I think people really want to become one of these Firewise communities.
Yes.
For fire reduction.
Yes, and I'm not sure. I'll look at the chat in just a moment, but definitely before I log off tonight, I will put the information for creating a Firewise community in the chat. But I'll also put the link to our Safer from Wildfire page in the chat, because that also breaks down the three slides where I talked about the home and the community and the surroundings. But it also, on that page, also the regulations themselves are also on there, which outline everything that needs to be done to qualify for a discount. And I want to also just really make it clear that even if your community is not one of the two designations that I spoke about, which was the FRRC or Firewise, there's an optional rating factor in this regulation that, don't quote me, but it states something like, if you have some other kind of designation that deems you a fire safe neighborhood, you can, or community, you can still qualify under that optional rating factor for a discount. So it doesn't necessarily have to be those two that I spoke about, because there is an optional rating factor that insurance companies may have written into their plan that we're currently reviewing.
All right, we have another question here. Have there been any insurance companies who will reinsure a property that is currently only able to get Cal Fair if the fire mitigation methods are being followed?
And I don't know yet, because we're still reviewing those plans. I haven't, the only one we've approved so far is the FAIR plan last week. We're still reviewing all other insurance companies' rating plans right now.
All right, here's one that's interesting. Are there discounts for the installation of external fire sprinkler and foam systems?
Oh gosh, I had that question and Oh my gosh.
Well, we can put that in the email later if you don't want to
We
misquote
did-
something.
Yes, we did have that question and I don't recall what the answer was. But I've got my notes here and I will follow up on that one.
Okay. Let's see. I've heard from insurance companies that if they hear you are a member of a Firewise community, it means that you are in an area with a high brush factor, in which case they simply will not cover you. Any comment on that?
I mean, the only comment I have is I have not heard that. In fact, I spoke to a group this morning who commented almost just the opposite. Um, so if you are in a Firewise community and don't receive a discount by Q4 of this year, once the rates are approved, we would love to hear from you.
All right, and I'm going to make this one be our last question before we move on to our next speaker. But again, I'm going to take all of these questions and we're going to see if we can get them answered in emails for all of you later. So that doesn't mean that we're ignoring you. We care about you and we're glad that you joined us tonight. It's just that we're limited on time. And I can't believe that 213 of you are taking the time to be here with us tonight. I thank you for your interest. I thank you, Lisa, for being here. And let's go with our final question. Can California and other large states work together to put pressure on insurance companies to offer all insurance or nothing?
It's a great question, and we do get that often. And I would say that the commissioner does not have the authority under Proposition 103 to do that. But we do receive that question often, and he has authority to do a lot of things, but that's not one of them. He also does not have the authority to make insurance companies write insurance. So, you know, that's what I can offer on that.
Well, I think you've done a great job of giving us some ideas for getting discounts and better pricing on some of the plans that are available to us. I also think it's great that you're giving us a hotline so that people can call, the insurance website that they can go to. You're going to put in the fire website so people can see more about hardening everything and what exactly that entails. So I think that's a wealth of resources, and I thank you for all of that, Lisa.
Thank you so much. And yes, and as Gloria said, folks, please reach out to us beyond tonight. I'm not going anywhere, and we're here to help you, and as well as our consumer services hotline. Thank you so much.
All right, thank you, Lisa. And then next up, as I mentioned earlier, we have George Kostirko, and I hope I'm saying that right, with the Federal Small Business Administration, and he's going to talk to us about business resiliency. So for those of you with businesses, George is your man here.
Hello, folks. My name is George Kostirko. Is my sound level okay?
You're great. Thank you.
Okay, great. So I'm a public information officer for the U.S. Small Business Administration Office of Disaster Recovery and Resilience. And I want to thank you for the opportunity to speak on this subject. I'm really pleased to see there's so many questions and so many participants on this. Not many people are familiar with what the U.S. Small Business Administration can do, so I'm glad we've got such a diverse audience and I can share some information. Basically, the U.S. Small Business Administration can offer residents, business owners, and nonprofits regarding recovery and financing and funding abilities in the days and weeks following a declared disaster. So in general terms, SBA offers federal low-interest disaster loans to businesses of all sizes, most private nonprofit organizations, homeowners, and renters. So if we can switch slides, that would be great. So so let me make sure I'm keeping with the slides here. So in the days or weeks following a declared disaster, our federal program provides low-interest federal disaster loans to assist businesses and residents that may not be insured or may be underinsured following the disasters. And that's going to tie into something that I'm going to be talking about here in a little bit. FEMA, which most people are familiar with, typically provides grants that do not require a payback. So SBA has a loan program that does require a payback, credit checks, and income verification before loans are approved. So essentially, there's kind of a two-stage process here. So let's use Hawaii as an example. In the first week or two, it's basically what's called first responders. And then SBA and other support services are there, but we're at what's called recovery. So that's kind of what I'll be chatting with you guys about, and obviously taking any questions. So like the process of a pre-approval for a mortgage, if approved, an applicant is not obligated to use any loans that the SBA may offer, but at least an applicant is going to know what resources are available. In the case insurance funds or no insurance creates a barrier to rebuilding or recovery. And you'll see on this slide that we have two programs, property damage or physical damages, and then we have economic injury loans. Now I wanted to, if we go to the next slide, I can share this. So recently, the U.S. Small Business Administration Office of Disaster Recovery and Resilience greatly increased coverage amounts as well as eased some of the payback terms for loans that we offer. So for the first time in nearly 30 years, accounting for decades of inflation, rising construction costs, and of course the impacts that some of these devastating fires and of course the foothills in Northern California and the flooding that can occur in more low-lying areas of the country, including California. SBA is more than doubling the caps for its home disaster loan program. So we can go to the next slide. Oh, no, let's go back one more. Sorry about that. So as you can see, we by doubling the caps, we're increasing loan limits that communities across America have access to sufficient funding for. So we help them rebuild homes, replace personal property, and reopen businesses when disaster strikes. And I also wanted to mention that mitigation is something that comes up. That's definitely an insurance company issue. That's something I think CAL FIRE provides some assistance with folks in the foothills. So the SBA is also expanding its mitigation assistance to other types of hazards beyond the declared disaster event. That could include maybe moving the primary home from one location where it's at more risk, moving it to another location on the property. As we know, communities, and I speak in general, of course, the United States, are often under threat from multiple types of hazards, including hurricanes, floods, tornadoes, wildfires, earthquakes, and more. So the announcement that about the loan limits going up is basically to ensure that property owners can use their disaster loan funds to rebuild stronger and essentially a little more resilient against multiple types of hazards and not just against a single threat. So I think speaking for Placer County and the foothills, of course, I think the big risk is fire. We can go to the next slide if you want. And one more. Okay, so we can go one more slide. I think I've covered this already. One more. Okay, so these are kind of some key things that I wanted to share with folks here. So we've increased the loan limits for primary residences. So it used to be 200,000, and that was for the longest time. That has been recently raised as of July 31 to 500,000 for real estate repair or replacement, contractor malfeasance, which is not probably for some folks there is not an uncommon thing, unfortunately. Refinancing and mitigation for home disaster loans. We've also increased the loan limits for personal property. So this is something that people don't know, but we actually have coverage and loans for folks that are renters that have lost personal property. So, and I'll talk to the terms a little bit later, but it goes over 30 years. It's pretty low, pretty low amounts of loans, but yes. The loan limits for personal property covers not only for homeowners or businesses, but also renters. So that's for the replacement of clothing, furniture, appliances, automobiles, and more for home disaster loans. So let's go to the next slide. So this seems like an odd thing, but this is actually a very, very critical one, especially in the foothills. Removing administrative limit on landscaping. So at one point, we had landscaping limits of about $5,000. As many of you folks in the foothills know, mitigation is very critical. The clearing away, making sure that you've got a safe space and whatnot. So this landscaping, by raising that limit, that can help in that. The other thing that they've done is, and this is kind of something that we're doing just to make it a little easier because the economy is is while it's improving, there's still some challenges in certain sectors. There's a lot of questions on whether or not people will be having to pay back student loans and whatnot, or to what degree. So we've extended the first payment deferment period from 5 to 12 months for all disaster loans. So that includes everything. This change removes the burden for the disaster survivors to begin making payments on their disaster loans before communities rebuild and recover. So sometimes people will get a loan approved, and before they've actually started building, they're actually already making payments on that loan. So that can cause some tension and some confusion. So we wanted to make that a little easier. We can go to the next slide. So another thing is that we've done, and this was started last year, is no interest accrual for the first 12 months. This basically waives interest accrual for the first year from the date of the initial disbursement for all disaster loans. This change ensures the payment deferral offers a true reprieve, as all loans will not accrue interest during deferment. And this change also reduces the overall cost of the loan to better support full recovery for disaster survivors. Okay, let's go to the next slide. Mitigation disaster loans. So this has been something that we've gotten some criticism about and concerns, not only by the residents, but also by members of Congress and others. So we've eliminated a restriction on property owners to use only disaster loan funds to mitigate a similar disaster event that caused damage to their homes or businesses. So this change gives property owners more options to mitigate future damage from different types of disasters, reducing the need for future financial assistance. Now, we may not see that so much here in Northern California, but we have seen it in parts of the country, let's say Louisiana, where you have multiple events, storm events coming, where people have multiple loans for basically a different storm, a different disaster, but the same amount of damage. So it's kind of like a repeat. The other thing, we can switch this next slide, is collateral requirements. So we've clarified our collateral requirements in the disaster loan program, under which blanket liens on business assets that provide no liquidity in the event of the default will not be required. So for homeowners, that may not mean much, but for small businesses, ones that maybe are working out of the home, or they've got, as long as they are paying federal taxes and filing as a business, we can see documentation. Some of the collateral requirements can be softened. That also gives a lot more discretion to determine the collateral required for disaster loans. That has been called for by Congress. That has been called for by many communities because that was seen as a barrier for some. So let me kind of give you, we can go to the next slide. I'd like to give you a summary of the benefits. And this is kind of this is our little chart here that kind of shows you where we're at now with the new loan limits. So while you guys are looking at that, I'll just go over some of the highlights. The businesses of any size may borrow up to $2 million to repair or replace disaster damaged property. That is still from before. Small businesses engaged in aquaculture, and most private nonprofits may borrow up to $2 million to help meet working capital needs caused by the disaster. Homeowners may borrow up to $500,000 to repair or replace their disaster damaged primary residence. Homeowners and renters may borrow up to $100,000 to replace disaster damaged property, personal property, including vehicles. And then, of course, I mentioned the interest does not begin to accrue until 12 months after from the date of the initial disaster loan disbursement. Okay, so basically what that means is that interest doesn't start until 12 months after you get your initial round of money to pay for things. We can go to the next slide. This is kind of where you can get information, but I wanted to talk a little about interest rates. So we update interest rates basically every quarter. So right now, the interest rates can be as low as 2.375% for homeowners and renters, 2.375% for private nonprofit organizations, and 4% for businesses, with terms up to 30 years. So those loan amounts and terms are set by the SBA and are based on each applicant's financial condition. I mentioned that we also have mitigation assistance for eligible SBA disaster loan borrowers who may choose to receive expanded funding to help mitigate their home or businesses. I think that may be something of interest to some of the residents here in Placer County. And we always encourage people following a disaster declaration to go in when let's say, typically we're under the umbrella of FEMA, but in some cases it might be an agency benefit. So we really encourage people to complete the SBA application, even if they're not sure they need it, because if approved, that loan becomes an option. It's like being pre-approved for a mortgage. You know that you've got that as a resource. I think a lot of homeowners, if they've suffered some pretty intense damage, that may seem almost catastrophic. It's nice to know that you may find that that you have incurred damage that may exceed your coverage, your hazard insurance. So what we would do, like use a typical example, let's say you have a house that's insured or a property that's insured for $500,000 and you find that the actual damage exceeds for rebuilding is 650. We will essentially, if all the papers are in order, because we are like a bank, so we do need to see the financials, whether it's a business or a homeowner, in terms of federal tax returns and income and all that. But essentially, you would be actually have that money ahead of time, that whole 650, while you're negotiating or with the insurance companies for the payout. Once the payout comes, that's basically credited against the loan. So while you do have to pay some money for repair and recovery, it is a loan that goes over a 30-year basis, and it's pretty low interest rates relative to what we're seeing right now out in the private market. So people are a little confused about where we stand. They hear a lot of things about declarations. So in the biggest declarations, which are often referred to as presidential declarations, we're partners with FEMA, and they also provide benefits for survivors, but they're much smaller. They're grants. They're not on the order of $100,000. That's much smaller amounts. So in the instance of a disaster, if there's a presidential disaster declared at some point in the future, we encourage everyone who has or believes they've suffered any loss to start registering with FEMA. So relative to the Small Business Administration and the slide you see, there's a couple of ways to do it. One way is virtually on the disasterloanassistance.sba.gov website or by email. And the second way is by calling an 800 number we have. We can go to the next slide, and that's got that information on that. So that is a very, very important resource for everybody. I would be glad to provide further outreach to the Placer County Economic Group here, and anybody who's got any questions. I have to tell you that every loan is individual, so we really ask people to start the process so they can find where they stand. We do have a range of benefits, and we do have certain circumstances related to HOAs and mobile homes and those kinds of things, which are called modular homes, not mobile homes. But we could go very deep on that, and I don't necessarily want to do that for folks that may not make a difference to them. But at the end of the day, I just want to let you know that Small Business Administration does offer a variety of loan programs. We've recently enhanced the amounts for folks, considering the economic situations that everybody's running into with rebuilding in some areas. So if you've got any questions, I'd be glad to answer some.
All right, George, it's Gloria. I'm seeing some of these in the chat. So we have a question of, do disaster loans for homeowners apply only to a primary residence? What is available for a secondary residence?
So if you have a secondary residence and it's not a primary residence, we do not cover that. If it's a vacation home, those kinds of things, that is something that you would hopefully have enough coverage on. We cover basically primary residences. So we unfortunately had some situations in San Luis Obispo County and in some of the coastal counties that got really hit hard with some of the flooding, where you had multiple residences on one property. The homeowner that lived in the primary residence was covered. They are really under their obligation really is to make sure that they've got that coverage for their rental properties through whatever insurance they may have. Now, if they're rental properties and it's a business, then that kind of falls into the area of business stuff. But in general, though, we do not cover vacation homes. We only cover primary homes.
And I think this next question overlaps a little bit with what we just talked about here. Can the SBA help an owner who owns a condo within an HOA and rents out the condo part-time? And does it make it easier to obtain SBA funds if the condo is owned as an LLC?
That I would definitely call the 1-800 number and ask that. We have people there that can answer those kinds of questions. We encourage you to do so. Please use these resources. I can't speak to the LLC specifically, but if you have all the papers in order and they've got and they, can transmit those to one of our loan processors. They can give you a pretty quick answer on that. And if they don't know the answer, they're going to suspend things for a little bit and find out how they can get you the answer.
All right, super.
We're pretty nimble. I have to tell you folks that when you get into the system and you start talking to folks, we do try to get an answer for people. We're a lot smaller than FEMA, but we're very, very focused on this loan program.
All right, we have one person who said, why are we talking about loans when we pay an extreme amount for insurance? And I'm going to guess that that's because that's the tool that the SBA offers. Right.
We don't offer insurance. We basically, we were invited here to speak about some of the benefits that SBA offers. There is a lot of, there's a lack of knowledge, I think, by folks in various communities about what benefits SBA offers because of this. It says small business, so people automatically assume that it's just small business that we cover, but no, we do cover homeowners and renters.
And I also like the nonprofits too. We've had some disasters in Placer County and it was hard to find resources for nonprofits. And I didn't know that. So that's kind of
useful. No, nonprofits are, I'll tell you, Amador, I was following the storm damage that we had in Amador. There were a couple nonprofits that were able to start a application process with us relative to, finding out what loans were available to assist them. Now this I don't know if we're seeing this as much in Placer County unless you're living in the ravines or something up near Auburn, but I think there were some folks that suffered a lot of flooding damage in Amador, and suddenly they were faced with the idea of either moving their home up a little higher, or look from a mitigation standpoint, or upon rebuild, there would be a requirement for flood insurance that they may not have had before.
All right. Does anybody else? Let me see if there were any other questions. Some of those are for the prior speaker. Someone said, what about loans for tree removal?
So that kind of mitigation actually can come through FEMA, but it's got to be a declared disaster. So we've had those questions come up where that kind of a mitigation can be applied for through FEMA, and they make that call.
Yep. All right. Does a rental property qualify as a business? If so, how do I get insurance? Again, SBA is not an insurance company, but do you consider rental property as a business?
Well, it's as long as, when I say a business, when we say business, it's very critical that if folks are renting out properties as businesses, that they actually are claiming that as income through the IRS and through their local tax, whether it's state and federal taxes, and they're actually paying tax on that, and it's declared. Because once again, we're a bit like a bank in terms of we are looking for cash flow, we're looking at ability to repay, we're looking at income, those kinds of things, and that would be one of those things where you have to apply to find out, because each situation is going to be a little bit different depending on how prepared folks are and what kind of financial paperwork they have.
All right, I see another question here for you. Does SBA have a source document for HOAs? Do you have anything on your website, maybe, George?
So what I would encourage people to do is, there's something called the standard operating procedure. It's a document that's it's series 50. If I would be glad to, I could email that to anybody if they want to look at. There's a whole section on HOAs, and it's kind of like a, okay, so if anybody has medical coverage, you get a book called Evidence of Coverage, right? It's essentially your evidence of coverage for SBA. And yes, we do have information related to HOAs, but if you really want to get deep into the regulation that is authorized by Congress, that gives SBA the ability to consider loans, you'll find information on HOAs in that area. So I've got my little cheat sheet here. If you just hold on just a second, and we'll see what we have related to HOAs. So I don't have it indexed, so I have to go through all the things here. If somebody if somebody wants to email you, or I can forward this thing to you, to Ava, I could do that, and you guys can pass that around if people want to take a look at that.
Yeah, why don't you do that? That'll make it.
I will send the PDF, because it's just, you know how it is sometimes with websites, it's kind of hard to find things.
Yep.
But I would be more than happy to share that. Now, the last time it was updated was in 2018. So there have been some changes, but it appears to me that most of the changes are really related to just increasing coverage amounts.
All right, and I saw one in here. This one, I'm going to give you a little bit of a pat on the back, George. SBA gives money ASAP. Insurance takes too long. That's not a question, but that's your pat on the back for the evening.
Well, that's very nice to hear, and we are always trying to. I'm relatively new to small business administration, folks. I worked in the state doing something else before I retired, and I will tell you that we hear a lot of stories where if we know an insurance payout is going to come eventually, and sometimes it might be multiple. Property owners that have a shared road or those kinds of things, how the private road thing, going up to multiple properties. And so basically, if the SBA feels confident enough that the information that the property owner has given us is true and correct, and they really need to get moving on their project, we will try and expedite at least a partial payment to start the process.
All right, well, I think the questions are slowing down for SBA. Any last questions for SBA? So I'm just going to remind everybody while we're waiting here for a second that we are going to be sharing the link for the recording. We're taking notes on all of your questions that we did not get to, because there was a bunch. And we're happy that you did that, but we're going to try to get some answers out to you. So watch for that coming up. We'll try to get those out to you yet this week. And you can share the recording of this video with everybody else who might have missed this presentation and let them know about the resources. And plus, we'll have the links and additional email information, PDFs, everything that you've been asking for in the email that we send to you later this week. So
Yes.
Check one more time on the questions. Nope, I'm not seeing any. So I'm going to say thank you, everybody. I think this was a fantastic session and a great response from all of you. I hope that we got you started at least on getting some resources to help you with your insurance questions. Be sure to reach out to all of the resources that Lisa gave you for the Department of Insurance. And please be sure to remember all the different options that George gave us for the SBA. I didn't know that you did all the residential work, nonprofits and things like that. So I think this gives us more tools in our toolkit. So thank you, everybody, for joining us tonight. Thank you, George, for your presentation. Thank you, Ava, for running everything. And everybody have a good evening. Thank you.
Thank you so much. I appreciate it.
All right. Good night, everybody.
Good night.